Hey, what's up YouTube? It's Ben, and in this video, we're going to talk about how recruiters get paid. So many people are constantly asking me, how do I actually get payment from my clients? How do I invoice them? What do I do with taxes? How do I actually deal with the money? How does that work with the business bank account? And I'm going to answer all your questions right now. So first things first, let's be really clear. At the start of the process, you would have a contract with your client. That contract is going to outline exactly what fee percentage or whatever fee structure you have in place, whether it's a percentage of their annual salary or a flat rate. That's going to be defined in the contract. The second item that's going to be in that contract that's super important is going to be your net terms. In case you weren't aware, net terms are exactly when you get paid. So for example, if I put in a contract 14-day net collection, that essentially means that 14 days after the exact start date of my candidate, I get paid. So if someone starts on June 1st, on June 14th, I will be receiving my payment. The third thing that's going to go in your contract is your guarantee period. Now, your guarantee period, you should already know, is the amount of time that you guarantee that candidate will stay with that client, or you have to replace them up to one time only. When it comes time to get paid, what you actually do is initiate an invoice. Now let me hop into my computer real quick for you, and I'm going to show you exactly how to generate an invoice. Super easy and super quick. So we're right inside my computer here. Now generating an invoice is much easier than you think. So I use oftentimes a really simple invoice generator that is online. It's actually free, and it's basically something that anyone could use and figure out. So the way you do this is find this link right here. It's invoice-generator.com. And what it'll do is allow you to basically just fill out a PDF. Eventually this will become a PDF. It'll add your logo right here. So let's go through that really quickly. And then it's going to ask who the invoice is coming from, right? So for me, that would be Seattle Search Solutions. Beyond that, who is it billed to? Now, this is not going to be a person's name. This is going to be the company. So let's just say ABC Industries. Perfect. Now, ship to, we're not going to fill that out because you're not shipping any goods or anything like that. You're actually providing just a service. Up here is a number generator. This is basically if you want to keep track of your invoices for any certain purposes. So, you know, if this is the second invoice that you've sent to this company, maybe you'll just leave that as a 2. If it's the first one you've sent, put it as number 1. And in that point, you'll be able to keep track if you have a system for that. Now, the date is going to be the current date. So let's just say it's today. Payment terms. This is where you get to type in your net collection, right? So if I have 14-day terms with them, which means I get paid 14 days from the start date of my candidate, I'm going to put net 14. I'll just put net 14. Then leave it at that. They know what that means. That would mean the due date. Let's just pretend that my candidate started on the 1st. And I calculate this through the weekend. So I'm literally just going to say net 14 right here. So that would come out to the 15th. So I'm going to run it on the 15th as the due date, and that is the official due date that they need to pay me by. So that'll be next Tuesday, basically. So again, pretending that candidate started on June 1st. With that being said, here's our line item, right? So you're going to line item, you know, John Smith. Let's say he's a welder position. You want to put something like maybe started June 1st, and let's say you could put his rate of pay here. Let's say he's making 25 an hour. So with that being said, let's say you just are running like a flat rate on this. or a percentage rate. Whatever that rate is going to be, let's just say that you've calculated it out and you figured out that over the course of the year that his salary is going to calculate out to a percentage where you're going to make $12,000. You're going to put that right here. And it'll calculate it out as shown right here, 12,000. If you have another position, right? If you have somebody else, you're going to want to add them here. Like if you're hiring 4 or 5 people, you will line item them all here. But we'll take this off for now, and we'll just pretend that we're adding this one person. Notes. This is going to be any information that you want to add in, or anything that you want to remind them of. John Smith, start date, June 1st, 2021. If there's like separate branches or something like that, you might want to add that in. But let's just say we'll leave the information there for now. Terms are basically exactly how you want to get paid. So this is something I'm going to talk about in a second here when I come back out, but also this is where you would add this stuff. So you would say something along the lines of, please remit payments via check to 1, 2, 3, 4, South Avenue, South Avenue East. Then you'd say something like apartment 8, and you would put wherever you're located, right? Completely made up zip code. Obviously not a perfect address. So that's where you would essentially put kind of how you want to get payment, right? So unless you've spoken otherwise with this client about how you're going to actually get your payment, that's exactly what you're going to put to them right here, because you want them to have this information. So you're going to put that in there. This you do not have to deal with. Don't deal with any of this here. This is totally kind of on their side. But this is super simple, right? So from my company to their company, it's for John Smith. I had some notes in here and I have my payment terms in here. Now, what I can do is actually download the invoice, shoot it over to them in an email. It's just a regular old PDF, so they'll open it up and see it and say, yep, it's an official invoice from Seattle Search Solutions to ABC Industries for $12,000. It's due on June 15th, and they'll be well aware. Now, here's one key element to remember. You always want to send your invoice the day that your candidate starts. That gives them plenty of time to get this payment in order, to get their accounts payable department all set up so that there's no lag time or anything like that. So they should have no excuse to be late on your payment whatsoever. So send this invoice over via email, and that's basically it as far as the invoicing goes. So now I'll hop back out and I'll talk a little bit more about invoicing, receiving payment, and taxes. All right, guys, so I'm back outside here. Now, that is not the only way to send an invoice. That's a really simple, free version of an invoice generator that you can simply use and type up in a matter of 5 minutes like I just did. Now, with that being said, you can absolutely utilize solutions like QuickBooks that do invoices very well. You can use all kinds of other software that's out there that's paid, that's free, that's cheap, anything you want, but whatever's comfortable with you, whatever you utilize often. Sometimes I'll use that. Sometimes I'll send them an invoice through QuickBooks. But here are a few rules that you definitely need to follow when you're invoicing. You might have noticed when I created that invoice, I asked for the payment to be remitted, basically mean to be given to me via check. That is how I like all of my payments to be received. I love that. It's a paper check. It's standard. I get it in the mail. All I have to do is a quick mobile deposit with my mobile phone and I'm done. It's so easy, right? So many people nowadays are all about getting things electronically, but be careful. There are huge problems with this. I would highly recommend that you are extremely careful with using different types of electronic payment services. And the only one that I really trust is basically doing direct deposit, ACH, through your bank, meaning they have your bank details. They will send you the money. The money comes into your account and it cannot leave. The other ways that people are doing it are via Venmo, credit card, PayPal, Cash App, all of these random type of simple solutions, except for they're not so simple because they're very, very susceptible to chargebacks. On a credit card, if someone were to pay me with American Express card on PayPal, for instance, I can go in and charge that back instantly, and boom, your fee's gone. You have no recourse except for trying to go through the legal system. Same exact concept goes for any of the other electronic forms that I mentioned, except for, of course, bank ACH direct deposit. Now, that is the standard. That's super simple, super easy. I definitely like to go the check route. That is personally me. I get the check. I have it. It's simple. But again, electronic is really fast and super simple that way. So a lot of companies are transitioning to do ACH and to do everything through bank transfer, and that's great. But I would not veer off that pathway and go into Cash App or doing Zelle or doing anything weird on PayPal, especially where ridiculous things can happen. They can hold your money for 90 days. They can stop the payment. They can think it's money laundering. It's just not the way you want to do business. So with that being said, let's cover taxes as the last item here, right? So if you plan on making anywhere between $100,000 to $150,000 in gross total revenue, that means everything that you collect before any taxes are taken out, that means that you're going to need to plan on putting aside about 20% of every single amount that you receive. So let's say you get a $10,000 check as a fee payment. You're going to want to put $2,000 into a separate bank account inside of your bank, right? You already should have a business bank account because you should have an LLC, a DBA, and an EIN. Therefore, you should create a business bank account with your bank, whether it's Chase or Wells Fargo or Bank of America, whatever it is. Have that business bank account, but then take out of the business bank account and put into a separate checking account, a free checking account that they should let you have. Make that a taxes only account and put that $2,000 in there. At the end of the day, we all have to pay Uncle Sam. Just a few more items on taxes themselves. It really, really depends on exactly how you are set up. Now, I'm not going to go into a full-on CPA seminar here because I'm definitely not a tax professional and I'm not certified to give this advice. This is for entertainment purposes only. So here's the deal. You can become a sole proprietor, which essentially means that you're just doing business on your own. You're a sole proprietor and you really have kind of no tax structure at all. You can also become an LLC -C, which is the default LLC, and that basically protects your personal assets from your business assets. So let's say your business assets include things like your computer or this microphone, and for some reason you get sued, right? A court can take all of these items from you, but they cannot take things that you buy personally in your personal life. So if you have a couch, if you have a personal vehicle, right, they can't take those things. So I think it's always good to actually formulate an LLC. I'm actually not a big fan of the sole proprietor. I would definitely formulate your LLC sooner rather than later, since especially you need 2 years on the books of having that LLC so that you can actually show self-employment if you're to go to get a loan from the bank for a mortgage or a vehicle or anything like that. You need to actually establish your entity, and that requires creating an LLC. So I would definitely get that started. The next step up from an LLC-C is an S Corp. That is an LLC-S. Now, what this means is actually you have a salary that you pay yourself. So once you've kind of gone through maybe 1 or 2 years of having an LLC, at this point, you would want to transfer and upgrade to an LLC S Corp, right? At that point, you're paying yourself a salary, a reasonable salary in the eyes of the IRS, and overall, you have a lot more tax advantages. I highly recommend that you find an awesome referral from someone that makes a lot of money and use their CPA. I don't care if it costs $2,000, use their CPA because they will find you deductions, various gray area loopholes, things that will basically be above board but still save you a ton of money on taxes. But in general, the bottom line here is if you're going to plan on making 100 to 150, put away about 20 to 25% of what you earn. At the end of the day, if you actually have to pay less taxes, hey, that's fine. You still have that money, and that's money that's yours, right? You've earned that money. It doesn't matter. If you plan on making maybe $500,000 or more, definitely keep in mind that you should probably put away about 35+% of that money, or at least be prepared to pay around 35%. Now, of course, that's not going to be the actual number because it will come down once you add in all your deductions and things that you've used for your business, things that you've bought, right? So the deductions include things like this microphone, your computer, your lighting, right, that I'm using on this YouTube video right now, camera, like all that kind of stuff. So those are deductions that will actually offset your tax liability and make it lower. But keep in mind taxes the entire year. Keep in mind a good tax strategy to be able to buy things that you can deduct later on, and they must be deductible. They can't just be kind of things that you want and say, I'm going to deduct this, right? No, that doesn't work. You have to have real deductions. So just to recap, basically make sure that you're safe on taxes. Put away about 20 to 25% if you expect to be making about $150K gross revenue. Also, that's how you invoice, what I just showed you on the computer. There's also many other ways to invoice. Do not invoice with anything other than bank transfer or ACH. Don't invoice with a Venmo, with a Cash App, or anything else like that where someone can use a credit card to charge you back. And that is essentially how you get paid as a recruiter. All right, guys, so if you enjoyed this video or got any valuable tips out of it, please smash that like button. Go ahead and make sure you're in my Facebook group, Six Figure Recruiters, link in description. Subscribe if you're not subscribed, and hit that alert button so that you know every single time I come out with a brand new video. Until then.